Hi everyone, I'm Landon Smith with RE/MAX Professionals, and I am here to walk you through the step-by-step process of buying your first home in Denver, Colorado. Okay, if you're in that boat, it's such an exciting time. I've been there. I couldn't wait to buy my first property. Sadly, nowadays, the first home that people purchase is in their late 30s. And so we're trying to break that trend and help people buy earlier. And with some planning, you can do that. And so that's really where it all starts, right? Is planning and setting a budget so that you can figure out, how to set aside some money every month to make sure that you've got enough to save up for a down payment. Okay. There's this conception that like you need 20% down to buy a house. It's simply not true. Okay. A lot of people get in with as low as $1,000 down. And there's loan options for 3% down, 3.5% down, 5% down, 10, 15, and 20, all the way up. So just know there's plenty of lending options. We live in an amazing place here in the United States where we have those lending options to put less cash down, where a lot of places in Europe and the rest of the world require a lot more down payment. And so that's why, in those countries, not many people are buying homes. And so we're very fortunate to have the setup that we have. The next step would be to speak with a lender. And I've got some amazing lending connections that I can get you connected to so that you can get the best rate possible in the market and get phenomenal service. And when you talk to your lender, they'll establish your debt to income ratio by asking you what kind of income you have and what kind of debt you have, and then pulling your credit to get a credit score. Okay, a lot of first-time home buyers have fear of their credit being pulled for a mortgage inquiry. Okay, just know that this is like a soft pull that typically, you may see a 10 to 15% point deduction in your credit score, and then it bounces right back typically. Okay, if you shop around and talk to 7 different lenders and they all pull your credit, then that's another story, right? You might get dinged a little bit more. But just know for a mortgage inquiry, the penalty is very minor and it bounces right back. So I wouldn't have too much fear about doing that 1 or 2 times as you're shopping around to get the best rate. And so that's the first step. And then after that, what we like to have people do is come into our office. We'll show you like market statistics, educate you on the history of the market of buying real estate here in the Denver metro area. Make sure that you're very familiar with trends, with seasonality, with supply and demand, what's going on there. And so you have an understanding of like how, what type of negotiating atmosphere we have in our market right now. And then we'll tell you what we're going to do for you to fight for your best interest, to make sure that we've got your back in the negotiations, and make sure that the process goes smoothly for you and that we eliminate and avoid a whole lot of risk that you could take if you didn't hire a real estate agent. And then after you do that, then it's time to go start shopping. The lender usually gives us a pre-approval letter that says you're approved for $500,000 or whatever amount it is. And then we go and hit the pavement, start shopping for homes and getting you through these homes. And my recommendation in that circumstance is to try to eliminate location first, figure out where you want to be, and then start eliminating houses based on floor plan, upgrades, all the other fun stuff. And we'll coach you through that every step of the way, to make sure that you're making great decisions, that you're not buying a home that's going to be a very difficult sell down the road and cost you money or set you back. Last thing you want is a money pit on your first investment, because then you won't buy another one and you'll be treading water on that investment. But if you buy a great investment on the first one, it'll springboard you to the next one and the next one down the road, and it'll become a fantastic asset in your life that will create real equity money, right? That up to, talk to your CPA, but the general lies, if you're a single person, up to $250,000 in gains is tax-free, no capital gains, and then up to $500,000 as a married couple. So pretty awesome. But we're very, like I said, blessed to live in a country where we can benefit greatly from owning real estate and taking a little bit of risk. So that's how the first part of the process usually goes. As you identify a home that you really like, right, and we eliminate until you get to the one, then we write an offer, negotiate on your behalf, try to get you the best terms possible. For a lot of buyers right now in today's market, we're negotiating 2-1 buy downs or 1-1 buy downs for them so that they can temporarily buy the rate down 2% for the first year, 1% for the second year, and save a lot of money on interest. And so that's pretty key. So we do our best to get you the best price, right? You can change everything about a house other than the price you bought it for and the location, right? A lot of the other things can change. Even walls can come down in some cases, but you can't change those first 2 things. So we take that very seriously and we try to get you the best deal possible. And we're seeing a lot of sellers reduce price right now on listings and be willing to negotiate and bend on their price more so than we have in previous markets. And the reason for that is we've got over 10,000 listings right now in our market, whereas during COVID times we had 1,200. So there were a lot more buyers for the supply that was out there. So back to the process. After you get a home under contract and there's agreed upon price, then we go and do a home inspection. Typically, we recommend doing a sewer scope and a radon test as well. And those are important just to make sure your house is safe and you don't have any major sewer issues that could be anywhere from $4,000 to $15,000 that you might need to fix later. So if we can mitigate that risk for you, and with a home inspection, we have a fantastic home inspector that will make sure that he's thorough, looking through your home, detailed, all the systems, all the appliances, roof, big ticket items. He sees everything, even every light switch, to make sure that the home is working properly. And if it's not, then you get the chance to negotiate with the seller and ask for things to be repaired. And the seller has a chance to resolve those issues on paper. If you guys come to a resolution, then the contract moves forward. If you don't, the contract terminates and earnest money goes back to the buyer. Is how the contract's usually drawn up. And so that's an exciting part of the contract. Usually the low point is the inspection. Just know that that's the saddest day. You find out everything wrong with the house and you're like, oh, I don't know if we're gonna get this house anymore. And then we go to work for you to try to make sure that we can come to a resolution with the seller and make it happen so you can go forward. And so in a balanced market, usually there's a little bit of bending that goes both ways, right? Buyers give a little, sellers give a little, and they come to a deal and try to create a win-win, and that's what happens a lot of times. So after the inspection's over, then we move on to the appraisal. Okay, if you're getting a loan on a property, most of the time there's an appraisal involved. Okay, if you're putting 20% or more down, sometimes the appraisal is waived by the lender because they feel like there's enough equity down on the house that they don't have a whole lot of risk, so they don't need to do an appraisal. And so they'll just do like a desktop appraisal is what they call it, where they just do a manual one with their technology that they have for home valuations. But normally an appraiser, an actual person, will go out to the house. You're not involved in that, and neither am I as your agent. Typically, it's just the listing agent that lets them in the door just for access, or they just go and use the lockbox and go by themselves. But that's how it works. They spend about 30 to 60 minutes at the house. They do a big report, multiple methods for getting to a cost, right, or a analysis for the home's value, and then they spit out the value, right, of the home. They do have the contract. They're looking at the contract as they're doing that, so they understand where the numbers are at, and they're seeing if it makes sense, right? They're basically there to protect the lender, to make sure that the lender is not lending on something that is undervalued, right? They want to make sure that value is there on the home. So that's the appraisal. If the appraisal comes in low, that creates a whole new negotiation. So buyer and seller can then negotiate because the lender is only willing to lend on whatever percent the loan is. So say it's a 95% loan, they're only willing to lend on 95% of the appraised value. So if the appraised value comes in lower than the actual value, then that buyer would need to bring cash to closing for the gap, right? Whatever that gap may be. It could be $5,000, could be $25,000. And so that tends to become another negotiation. A lot of buyers would say, I don't have that cash. I can't do that. So the seller may have to bend and come down to meet that number. And so that's, or meet halfway, say buyer will bring 5 extra, seller comes down 20, something like that, right? So that's typically how that negotiation goes. And depending on different markets, it goes differently based on supply and demand. And then after we're through appraisal, then it's a 97% chance that it's closing at that point. And so the only thing left is to get the rest of your loan documents to the lender. They may be reaching out asking for additional bank statements or an additional form from your employer to make sure that you're still working. Something to verify employment. There's all kinds of things that could come up. Great lenders try to knock out as much as they can up front so they don't have to come back and ask for more and more. But there may be a couple forms that you have to get to the lender for final underwriting. Once it's all submitted, then you get the clear to close. We love those words. CTC, clear to close. Okay, that's a happy day. That means that your loan is all clear. You don't have anything to worry about as far as that goes because the underwriter has already put their stamp of approval on it and said you are qualified to buy a house. So that's pretty awesome. Then we make plans for closing, set up the time at the title company usually to sign docs. Okay, you always want to plan for about 90 minutes, typically 60 to 90 minutes at a closing when there's lending docs. The lending doc stack is like anywhere from that high to this high, depending on the type of loan. If you get a down payment assistance type loan like CHAFA in Colorado, that is something that takes a little bit longer. If you get a loan, like a normal conventional loan, the stack is a little bit shorter. But you're probably going to sign 30 to 60 times at the closing table. Yeah, that may seem ridiculous, but there's new forms every year that come into the contract or closing docs that make it so that more people have to cover themselves and make sure that their liability is not out there. So that's why there's a lot of forms. Basically, they say the same thing. If you don't pay, you can't stay, right? So you just got to keep signing and signing and signing. And if you want to review those closing docs before you get to the closing table, you can request those and the title company can send that closing package to you if you're more thorough and like to really analyze those documents. And so that's the typical time frame. If you're on the other side, if you're a seller, it only takes like 20 to 30 minutes typically to close on their docs. But buyers take much longer because of the lending side. So that's usually it. After you walk away, get a snapshot of you with the, holding something that says I'm a new homeowner, right? With keys maybe in your hand. And it's a celebration. We like to make it a really fun, happy day. And then, we always coach you through lining up with a mover, making sure that you've gotten your utilities turned on so that you don't get a shut off with Excel or the utility company. And so there's like some key things there that make it a smooth process so that you can move in, get all your stuff in there, get it organized, and enjoy your house. So that is the process of buying from start, right? Budgeting, meeting with a lender, meeting with a realtor, getting to contract, inspection, appraisal, and closing. And hope you've enjoyed this video. If it's been helpful, please post in the comments below. Would love to hear your thoughts or your plans. If you're planning to move here to the Denver metro area, I would love to know about it. Me and my team would love to help you to find a great home that fits your needs and your loved ones. And so thanks again for listening. Please subscribe to the channel if you liked what you heard here, and we'll come out with more stuff just like this to keep you informed on the real estate market here in the Denver metro area.